Hi, I'm Max Keiser, and this is the Keiser Report. You know, do you like the VIX? Well, the VIX likes you. Dun dun. How does that song go again?
Dun it.
Oh yeah. Dun dun. Dun 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 dun. Stacy, what the frick's going on here?
Well, first of all, Max, tell people what the VIX is.
Oh well, it's the volatility index. You know, it's a contract that traders can buy and sell to hedge themselves against volatility. However, the VIX, like everything else, is being manipulated, so it's not giving a good price signal. It's like you take the batteries out of the smoke detector in your home. So your house could be on fire, and you don't hear the smoke detector because you took the batteries out, so you don't leave the house. Even though the flames are engulfing you and your family, you're like, I don't hear the smoke detector, so must not be a fire. So the VIX is completely manipulated. It doesn't tell market participants, it doesn't give them a signal about the true volatility, and it's just another piece of the overall way that markets are being destroyed to service a few kleptocrats.
Well, all of these rigged indexes around the world and price signals, I think, is a form of chumming. It's basically throwing bait into the water. It's encouraging the seals and minnows and little fish and little chubby humans to get into the market waters to get eaten by the sharks. Now, I have this tweet here, Max. VIX has been sitting near or below 12 for 2 weeks. The last time this happened was in 2007. So everything seems calm, the water seems calm, so you feel quite confident that it's safe to get into the waters and go swim in the markets.
Right, well, as markets go higher, there's an incentive by people making money in these markets to do whatever they can to manipulate the markets so that it's easier for them to make more and more money. So money aggregation tends to make people greedier. People are not satisfied when they are making or accumulating large amounts of wealth. It increases their greed and paranoia and fear. That's one of the tragedies of wealth, I guess you could call it, is that most people, it doesn't give them any release from fear. It actually increases their fear and paranoia. And so they go whatever they can to make it impossible for anyone to encroach on their ill-gotten gains. So they'll manipulate the VIX, they'll manipulate the markets, they'll buy politicians, they'll buy David Cameron, they'll buy Barack Obama. They'll do whatever it takes to protect themselves until such point as the whole thing explodes. So, I mean, there's a famous line in Jaws where the fishermen on the boat, one of them says, we're going to need a bigger boat. Yeah. I mean, this is what the European Central Bank has told the market, that the fraud is so enormous at this point that in order to accommodate another $10 to $15 trillion worth of credit default swaps and derivatives, essentially fraud, they're going to expand their balance sheet by 10 to 15 trillion euros. They need a bigger boat to float on this ocean of fraud. Meanwhile, there's the killer white shark ready to jump up like it did in 2007, 2008, like it did in .com in 2001, like it did in Asia in 1996, like it did on Wall Street in 1987. There's always a reversion to the mean. There's always nature exerting itself. There's always the killer white shark. It's here. It's coming. It's breaking surface.
Yes, in fact, we're going to go over those exact moments you mentioned, but I want to mention, you know, well, when those crashes happen, it's like a feeding frenzy. Great fortunes are made by the giant white sharks of the markets. Think of this last crash that we had in 2007 and 2008. John Paulson made billions and billions of dollars on the collapse. Very few, like destroying all the wealth of the long, peaceful period beforehand.
Well, they say markets go up a staircase and down an elevator shaft. You know, they go up, 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 and then down the shaft it goes. There were a few participants that made money on that collapse. John Paulson being one of them. But remember, there was a $5 to $6 to $7 trillion wiped off the face of the market. Just as back in 2000, there was a $5 trillion wipeout of NASDAQ, and stock market crash of 1987 was a multi-hundred billion trillion dollar wipeout. So there was real wealth being destroyed. Yes, there are a few people that are able to position themselves to make money on the crash, and of course, throughout history, you have people who position themselves and then cause the crash.
Now, I mentioned the word chumming, and I want to go into that in order to highlight what is about to happen, perhaps, in the markets should this done moment happen. Well, chumming is the practice of luring animals, kind of like humans, usually fish such as sharks, by throwing chum into the water. Chum is bait consisting of fish parts and blood, which attract fish, particularly sharks, owing to their keen sense of smell. So we're being attracted, pulled into the markets by the chumming, which is the rigging of Forex markets, which is the rigging of Libor, which is the rigging of gold fix, to make everything seem placid, seem safe, that there are no great whites, there's no jaws lurking below the surface. And just so you know, because I know you think the Brits make funny words for everything, they call chumming, they call it here Rubby Dubby for some reason.
What is wrong with the Brits? Rubby Dubby. Why does everything have to sound like baby talk? I got my brawly and my wellies and my Rubby Dubby. It's because they're all subject to the Queen. They all want to be with the Queen, the mommy, mommy, mommy. It's too bad, man. This country needs to grow up.
Well, in many parts of the world, Rubby Dubby, or as we call it, chumming, is illegal because it attracts these sharks. So I want to look at one of the recent illegal activities of rigging markets, and that's Libor. This new Libor scandal will cause a terrifying financial crisis. And this is from Jesse Colombo. And he says, yes, there was a rigging Libor, and yes, they stole tens of billions of dollars, but it's creating the ultra-low Libor rates, which have been low for the longest period ever in history. If you look back at the chart that he gives us, you see Japanese bubble and bust, Asians economic miracle and crisis, dot-com bubble and bust, US and European housing market bubble and bust, and the current lowest Libor right now. So all of those busts were preceded by ultra-low Libor rates, and then everything, people were secured to get into the water. They thought it was safe to get into the water, and they got eaten by the predator on Wall Street.
Well, you had a really good example of that under the Clinton administration after his failed healthcare reforms never got through. Then Robert Rubin, who's one of the sharks on Wall Street, to chum the population back into the markets. They got rid of Glass-Steagall. They brought about the Commodity Futures Modernization Act, which decriminalized gambling on a lot of these derivative contracts, and they brought back a whole new group of folks to set them up for another slaughter. And so right now you've got a big setup for another massive slaughter. And, you know, this chumming process goes on. Think Bernie Madoff. I mean, Bernie Madoff was really a keen student of chumming in that he would constantly deliver 1% a month returns. The genius of Bernie Madoff was that his returns were great. They weren't super spectacular. They were just very good, 11, 12% a year, consistently, markets up, markets down. That was his chum, that chum line. Without telling anybody, that was a huge Ponzi scheme. Similarly, in the UK and the US and around the world, around Europe, it is an enormous Ponzi scheme built on debt that can't possibly ever be paid back. But as long as they get the ECB and the Federal Reserve and the Bank of England to throw out the chum line of promising lower interest rates and quantitative easing, you bring a whole new generation in to be destroyed by the shark of the inevitable consequences of the crash that is as predictable as night following day. It's just another generation gets destroyed. Some win, some lose. They call it Darwinism, financial Darwinism, economic Darwinism, or just plain financial terrorism, whatever you want to call it. The result is the same. You get a whole generation get wiped out, and then because people still, you know, go to bed at night and make babies, there's plenty more chumps where that came from.
Well, this Rubby Dubby, or chumming, whatever you want to call it, because of the Libor rates being very low, Jesse Colombo is saying, similar to what you've said, is that interest rates should be at 4 to 7% in most non-crisis areas of the world, like, say, China. And yet, because all of their contracts, most of the contracts, like 2/3 of the contracts in China, are actually based on Libor. So they're able to borrow at 1%, which is why you see these giant bubbles emerging. So the bubble's so big that we're feeling the effects of the bubble right here, right behind us in London, with all these flats being bought by Chinese based on these Libor bubbles over in China.
What people don't understand is that this object of finding intelligent life somewhere in the universe is a failed mission from the get-go. Because all the intelligent life outside there in various planets around the universe see us through their Hubble telescope equivalents, and they see a big planet of debt. And they try to avoid us at all costs. Nobody with an intelligent brain in any other planet anywhere in the universe wants to get anywhere near planet debt, as it's known throughout the galaxy, throughout the universe. Nobody wants to touch planet debt, so they don't reveal themselves because they're afraid that Robert Rubin is going to show up on some planet, some exoplanet, some parallel galaxy and leverage buyout of some Jupiter-like moon and end up giving them all the debt. Nobody wants anything to do with Earth anymore.
Well, speaking of debt, the largest holder of debt, or certainly the second or first or second, is JP Morgan. They're in this final headline here. JP Morgan sees record $100 billion in loan funds. The business of bundling junk-rated corporate loans into top-rated securities is booming like never before after the implementation of regulation aimed at making the financial system safer.
Well, I mean, in the headline itself, it belies anything resembling truth. It says we're going to rebundle junk into high-rated securities.
Well, more than $46 billion of collateralized loan obligations, CLOs, have been issued so far this year up to May, compared to last year, all of last year, that we saw $82 billion. So this year, JP Morgan says it will be $100 billion, which will be a record high, more than 2007 and 2006 before the last crash. And again, it's bizarre because it's saying because of the Volcker rule, which is supposed to make the system safer, they're actually issuing more of these debts, making the system less safe.
Well, but nobody is going by any of the Volcker rule. Nobody is doing any compliance at all to any rules. They're simply repackaging the same worthless, toxic debt ad infinitum and reselling it back to themselves over and over again to take the fee. And because interest rates for them are zero or less than zero, now with negative interest rate policies, there's no risk to them. But meanwhile, in the other part of the reality curve, you've got people who are now paying 2, 3, 4 times more for food, for energy, for debate, for health care, for airline tickets. So their quality of life is shrinking. And you've got countries now bringing about laws that would institutionalize serfdom.
Here in this story, you have these collateralized loan obligations. People can't get enough of junk. And yet the ECB is saying somehow sending rates negative, the deposit rate is going to drive more loans. Like, we need more. There's already too much that they're packaging junk off, chewing gum off the pavement. They're turning it into a high AAA rated bond. So I don't see that there's a problem with not enough debt circulating.
Well, meanwhile, the environment itself, which is the source of all wealth, is collapsing pretty rapidly. So the ecological holocaust that is going to destroy human species is rapidly approaching. Not fast enough as far as I'm concerned. All right, Stacy, thanks so much.
Stay
tuned for the second half. A whole lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to David Graeber, author of Debt, the First 5,000 Years. David, welcome back to the Keiser Report.
Well, thanks for having me.
I want to throw a number at you, and we have not had a chance to talk about this, but I think you might have something to say about it. According to some recent psychological studies and some surveys, some studies have been done of this current generation, and they discovered that empathy is down 40% over the past 15 years.
Wow.
So the ability of this new generation to empathize is crashing. And I would think that would have a lot to do with everything that you talk about in a lot of ways. What do you think?
Yeah, well, I mean, one of the effects of debt is creating these generations of people who start life in this sort of panic where, like, God, I have $60,000 worth of debt, what am I going to do? Is that you can't sort of sit back and observe the world, care about other people, because you almost have to be self-obsessed. And it's an interesting thing, actually, because I always use the vampire metaphor. Why is it that monsters are scary? It's not just that they'll kill you. Like, the really scary monsters are the ones that turn you into one of them. So you get bitten by a vampire, you become a vampire. You get bitten by a werewolf, you become a werewolf, you turn into a zombie.
Okay, so let me jump in right there for a second, because in economics they talk about the transfer mechanism where banks, or let's talk about a contagion. How one bank will blow up in Asia, and because there's the counterparty risk, other banks blow up. And what you're describing is that on a more human level, the mental
we all get taught to think like banks.
And you become as a
little
human
banks.
being.
Yeah.
Your day-to-day emotional reality is reflected in this way. So I think what you're saying.
Exactly. So they're trying to turn people, but this is the evil part. Okay, the evil part is, you get turned into a capitalist whether you like it or not. You want to go to college to think about the meaning of life, but it's like, oh, I have $60,000 in debt. I need to make some money. So everything becomes subordinated to thinking like what can be turned into money and how. So you become a capitalist, but you become a capitalist with no money. So you don't become like the cool count vampire, with the minions who can like enchant people. You become the pathetic flunky like minion vampire.
So you're separating the capitalist mentality from capital. In a lot of ways. So,
exactly.
In other words, you've got a generation now that graduates from school totally in debt. They become mercenaries, if you will. They need to just pay off that debt, and they'll do a job like be a remote drone operator in Florida flying over Afghanistan.
Exactly.
Or some other soulless
Anthropologists
job.
are like that. I mean, it used to be in the 60s, like anthropologists wouldn't work for the military. And now, despite 30 years of like our telling ourselves, oh, this terrible colonial legacy, we're doing the exact same thing now that we wouldn't do back then. And the reason is because there's no jobs. I mean, everybody's in debt. There's no academic jobs, or there's adjunct jobs which are pathetic. Military comes and says, okay, I'll give you a couple $100,000 a year to like blow people up. Somebody's going to do it.
If empathy as a component of society is crashing, if you will, to use a stock market term, then for groups that are trying to get people motivated to think differently, let's say Occupy movement, in which you were one of the architects, if you will, of the early movement. So or the ecologist movement or human rights, civil rights movement. They're fighting against not only a wall of accepted immorality and accepted criminality, but they're fighting against a wall of a generation whose very ability to empathize is crashing. How do you overcome that, if you will, if you can, if it's possible? What do you think?
I'd say two things. One thing is psychological studies. I haven't seen the ones you're talking about. That's really interesting. The ones I have seen show that the poorer you are, the more empathy you have. So essentially, when they put you through higher education, when they put you through the things that you learn and being a privileged person, you're taught how not to empathize. So it's not natural. Naturally, you see somebody suffering, you feel bad, you want to help them. I mean, that's a basic human. It's not something you have to teach people to do. It's something you have to teach people not to do.
Well, let me jump in here for a second, because we know that recently the trend in banking circles has been to hire people with autism and other forms of mild brain disorder.
It's just like they hire sociopaths to be cops.
For this very reason, because empathy gets in the way of managing money. If you start to think about the consequences of your actions, you might not pull the trigger on a trade to make bank money. So I'd say that's part of it.
Which is really interesting if you read Adam Smith, because like these guys worship Adam Smith, but Adam Smith says the only reason to want money is because of empathy. We all want to we all empathize for others, but we want other people to care about us. So that's why you want to have money, because if you're prominent, if you're doing okay, then everybody cares about you.
Well, that's interesting, because Adam Smith and the Enlightenment comes along after medievalism, where there was tremendous wealth disparities, and then the Enlightenment and Adam Smith's way of thinking was a way to try to even things up a bit by giving folks the ability to get paid and to participate and to be part of a middle class. I want to talk about
he'd be considered a wild radical right now by most of the people who like him.
That would play into the concept of market fundamentalism, where people misread Adam Smith to draw their own conclusions, the way fanatical extremists would misread the Quran to come up with the justification for all kinds of bad actions. Same people read Adam Smith incorrectly to justify their bad actions.
Absolutely. I mean, and they don't read his full work, because in fact what he actually said is the only reason to want wealth is to put yourself in a prominent position that people will like you and care about you, and you'll be able to be in a position to care about other people. Empathy was what it was all about for him.
Well, what I find amazing is that the whole idea of a market as described in Wealth of Nations and during this period is that the price discovery mechanism is the product of the community coming together and trading. But these days, when you mention terms like community,
they hate that.
It immediately becomes socialism and something to sneer at. Somehow the prices are going to discover themselves through the actions of a few kleptocrats. And the result is ecological devastation and social unrest, right?
Yeah, if you really think about it, like, from each according to their abilities, to each according to their needs, that's supposed to be communism. But supply and demand, that's supposed to be capitalism. It's kind of the same thing. Everybody puts out by what they can do, and everybody gets in terms of what they need, and that's what's supposed to set prices.
Right. The problem with that.
It's all based on the idea of a community of people, division of labor that benefits everybody for mutual benefit.
Right, and in that socialist model, what happens is you end up the rise of a charismatic dictator, essentially.
Right, or a bureaucratic class.
And the resources and goods are misallocated, not according to the purist notion of what it should be. But similarly in capitalism, what we're seeing is the rise of the kleptocrat and a similar class that is engaged in the same kind of misallocation.
In either case, you get some sort of privileged elite that ends up like taking advantage of the situation.
Okay, so your book, which is really a seminal book, which is taught in many universities around the world now, 5,000 Years of Debt, and it's quite an ambitious book, and I think it is a mandatory reading for anyone who really takes their interest in economics seriously. Where are we in that cycle? Because debt goes through different cycles, and we're obviously in a period right now of enormous debt aggregation. How does it compare historically?
Well, that's an interesting thing, because when I started looking at the really long-term historical cycles, what I found was that there's a kind of a back and forth movement. You start out with credit systems, and then you go to bullion systems, and you go back to credit systems in the Middle Ages, and then around 1450, it starts shifting back to bullion. Everybody's actually using specie, gold and silver is money. Now we're moving back toward a credit system. But the thing is, when you move to a credit system, you need to have mechanisms in place. I think that's the big lesson of history. In ancient Mesopotamia, they would just cancel debts periodically, just wipe the slate clean and start over again. In the Middle Ages, you had usury laws, both in Islam and Christianity, and they were doing other stuff in China, had the same effect. You need some overarching mechanism to make sure that the people who have control of the means to create credit don't just basically enslave everybody else. So
let me just jump in, because just to give people an understanding of your book, one of the interesting facts about it, in the opening chapters, 5,000 Years of Debt, when money, as it came into existence in the modern world, essentially started off by me going into a shop and telling the shopkeeper, let me get a pound of flour right now, and I'll pay you next week.
Right.
Okay, that was the beginning of money. So
basically, yeah.
There's a receipt there. That was kind of the first notion, if you will. It wasn't people think that money was started by a Camry shell or a gold nugget or a unit of exchange. But as you point out in your book, it starts off with a loan, essentially, is how kind of money got started.
Right. If you go in ancient Sumer, if you go in and get a beer, you put it on the tab. And every 6 months or so, you bring in something, you tally it up, And everybody had little tallies of what they owe.
And this is punctuated during war times, when soldiers say, I'm not taking your credit, give me gold.
Or merchants say to the soldiers, yeah, I'm going to give you money on credit. You're not going to pay it back. Here's some big thug who's wandering through with a big sword. I mean, I'm never going to get my money back.
So if we're on credit, if we're in a credit period right now, as you describe, and it looks like the world is poised for some major conflicts. So this would seem to presage the re-institutionalization of gold.
It could, but the actual direction we're taking seems to be moving the other way, but we're doing it backwards. I mean, yeah, if we descend into general warfare, then we'll tend to go back to some kind of hard currency. But there's a lot of reasons to believe that kind of war, we're actually moving away from it. There's actually less warfare than there was 20, 30, 40 years ago. There were 30, 40 wars going on.
But the credit has expanded exponentially.
And credit keeps expanding.
But if we're heading toward on a war footing, and you see a lot of replay of the Cold War rhetoric, and a lot of people are not talking about gold, and China, Russia, Iran are accumulating gold.
They're trying to do something to break out of the dollar, because the dollar is essentially being used as a way of funding American war making. And Michael Hudson has written on this in great detail. The whole international architecture is designed around funding the Pentagon, he points out. And it operates that way as a sort of indirect tax through American Treasury bills. I'm sure you've talked about how that all works on the show before. But that system is being challenged now, and people like Russia and China talk about it very explicitly. We need to break out of this system into a different kind. How they're going to do that isn't entirely clear. For a long time, China had a big problem that they couldn't turn their currency into a global currency because they didn't owe any money. The whole thing is based on debt currency. U.S. military debt is basically the world base of the world financial system. China doesn't have any debt; they couldn't really do it. So they're now trying to create a new system to get around that.
We asked Twitter to tell people you're on the show, and we asked for some questions. And one question came up. You use a term often and of a BS job. We can't use
Yeah.
the actual phrase,
Oh, I'm
but I
sorry.
think
I
people
didn't
will
realize
understand
that.
what that means, a BS job. And the assumption, of course, is that we only have about 30 seconds left.
Oh,
but
no.
the assumption is that it's like a low-paying job, but in fact, no.
No, actually, this is a really interesting thing. I've been fascinated by this for years. It's like the Sovietization of capitalism. You know, they had all these make-work proletarian jobs, so they had full employment. Now, that's exactly the sort of thing that's not supposed to happen in capitalism. But if you look at the average firm, they're full of people who don't actually do anything. And if you tell people about this, they'll say, oh yeah, there's like all these kind of middle management guys who are like, well, I'm the global strategic vision coordinator for the East Coast of,
Or at least be a stockbroker, which essentially you do absolutely nothing. You just move paper around.
You get an average corporate lawyer drunk, they'll say the same thing. It's like, well, I don't really do anything, and if my job disappeared, the world wouldn't be any worse for it.
All right, David Graeber, we have to cut it off there because we're out of time. Hopefully, we'll have you on again soon. Thanks for being on the Keiser Report.
My pleasure.
And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, David Graeber, author of Debt, The First 5,000 Years. If you'd like to get in touch, tweet us at Keiser Report. Until next time, bye, y'all.